Welcome to day 4 of the QuickBooks Challenge. Today we are going to focus on getting your accounts receivable cleaned up. Remember, accounts receivable is the key for cash flow management for any business. If you are a cash and carry business such as the hair salon or a retail store or a grocery store, this challenge may not apply to you. However, if you're like myself that offers clients terms and I invoice my clients, then this challenge will be helpful for you. I have 6 steps that we're going to review to help you get your AR in shape for 2013. The first step here is, does your AR aging report reconcile to your balance sheet? And what I mean by that is, if we run an AR aging summary report, reports customers and receivable AR aging, I have a balance down below of this on this report, $34,411.80. Now I want to look at an accrual-based balance sheet to see if this would reconcile. So I have to change my basis of calculation here to accrual. I hit OK. Now I have my accrual balance sheet, and I look to make sure that this balance and my AR aging summary total, these two numbers match. The one thing you need to keep in mind under Customize Report, this advanced button here, you want to make sure, oops, wrong report I'm doing that on. Under Customize Report Advanced, I want to make sure that this is set to report date. Okay? That will help you make sure that you get the correct balance to reconcile to your balance sheet. Also, another key, make sure the dates are correct. Step 2 of today's challenge is making sure that if you run a cash balance sheet, that your accounts receivable zeroes out or not even appears on your balance sheet. In this case, we actually have a balance in our AR on our cash balance sheet, telling me that we may have some transactions that need attention and that there might be some errors. In this case, I would be seeking a professional certified pro advisor to help you get this reconciled and to investigate the issues here. I would also, if your balance sheet, accrual-based balance sheet is mentioned in step 1, does not reconcile to your AR aging summary, I would also seek out a professional certified pro advisor to help you with that issue. So we've covered step 1 and step 2. Step 3 is simply to review your AR aging for old AR and negative AR. In this case, what we have here is we have some older AR in this line here for this gentleman, for this customer, that I may want to take a look at to say, have I made every reasonable effort to get this collected? And if I have, I need to issue a credit memo. By simply drilling down to the invoice, I can issue a credit memo and write this invoice off by going to the invoice and issuing a refund credit. And you can see here, creates a credit memo using the items and prices of this invoice. So if I issued a credit memo towards this invoice, I would write this AR off, this accounts receivable off, and it no longer will appear. In this case here, you can see here that I have here something that a negative number that probably needs to be applied to this invoice. So this would need a little bit of attention and a small amount of cleaning up. And then once again, I would just go through to see if there are any older items. I have an item here in the 1 to 30 that I may just want to make sure that this is actually correct too. So all these things I would just kind of eyeball and make sure that I've done everything I can in my older columns to get collected. If they are not going to be collected, issuing a credit memo to write off the balance. If I have some negative balances due because I've issued credit memos that I haven't applied to invoices, or I have overpayment on invoices, I would have to get those issues resolved as well to make sure that all the accounts receivable reported on this report is accurate and correct. So on our next step 4 here, what we're going to do is we're going to review the report's average day to pay summary. So under reports, customers, and receivables, there's a report called average days to pay. I would actually review this report, and I would look at the clients that are taking an extremely long time to pay me. So if my goal is to get paid in 45 days, I want to look at everybody who does not pay me within 45 days. Actually, if my goal was 30 days, my cash flow would be better, but once again, this depends on your type of business. I would review the terms. I also would pull up a report, and this is a modified customized report. This is the customer contact list, and I simply just went down and selected terms and checked on terms here. So my terms for my clients now appear. I would be running these reports hand in hand to look at the terms of the clients that don't pay me timely. And I may consider, if this is net 60 and he pays me in 90, I may reduce this term to 30. So this is one way of ensuring that you would get paid faster. So this average days to pay summary and your customer contact list customized with the terms checked in this box here, and then reviewing this and comparing it to the terms that you have for your clients to help you maybe in 2013 get cash to the door a little quicker. So that covers 4 and 5. Number 6, make sure your aging report is correct, is correctly aging by you checking out your preferences, your company preferences. So under Edit Preferences, we actually have a report preference, and under here, under company preferences, our aging report, do we want to age from the due date or do we want to age from the transaction date? I like to age from the due date. However, once again, this is your own, this is particular, customized for your type of business, but I did want to let you know that this is available to you for choosing how you like to age your aging reports. Once again, I went under Edit, Preferences, Reports and Graphs, Company Preferences. So this includes our short video segment to help you with getting your AR in shape for 2013.